Without your customers, you wouldn't have a company. QuickBooks helps you track information for your customers, their balances, and who's paid you. This chapter guides you through setting up customer information, sending and tracking invoices, and depositing their payments at the bank. Eventually, you'll learn 2 methods for recording sales. But in this chapter, we'll focus on using accounts receivable, or in layman's terms, invoices. Invoices use accounts receivable to track who owes you money and how much they owe. You'll learn about great reports that help you with collections and help you track who's overdue. When your customer pays, QuickBooks helps you close your invoice and record the deposit at the bank. But let's not put the cart before the horse. Before you can send someone an invoice, you need to set them up on the customers list. You learn about this first.
You've already seen how to work with lists and how to add, edit, and delete list entries. But it's important to talk about a few unique features that are available when you set up customers. To see the customers list, place your cursor over Invoicing or Sales, and then click Customers. Let's edit an existing customer. Just click their name, and then Edit. You already know what a lot of this information does. For instance, this customer has a first and last name, company name, a billing address, shipping address, email, and phone number. But there are a few options that deserve a little more attention. This section lets you keep notes about your customers. These notes will show up at the top of the screen whenever you click their name on the customers list. There are also tax options that you'll learn more about later. There is also a Payment and Billing tab, where you can include a customer's preferred payment method and their preferred delivery method. Anytime you record an invoice or sales receipt for this customer, QuickBooks uses these settings. Terms lets you set the number of days you give a customer to pay their invoice. Trevor Incorporated's terms are net 15. That means they have 15 days to pay off the net, or total, of their invoices. When you're setting up a new customer, you can also include how much they owe you right now in the opening balance field. At Real World Training, we recommend that you leave this as 0. Instead, record the open invoices individually through the new menu. There's also an area here for attachments. If you have any documents that pertain to a customer, like documents they've signed or any PDFs they've sent you, attach those here. These are the unique options available when setting up customers in QuickBooks Online. Many businesses have separate jobs with the same customer that they'd like to track separately for income and expenses. QuickBooks Online helps you do this with sub-customers. By using sub-customers, you can see your income and expenses for each job, but still bill the customer for the work that's been done. Let's look at a few examples. First, move your cursor over Invoicing or Sales, and then click Customers. For a construction company, you might use a customer to track a home builder you do work for, and then set up sub-customers for each home you're working on. There are even more ways to use this feature. If you're a law firm, you might set up a client as the customer, and then each of their cases as sub-customers. Or if you're running a private school, you might set up a family as the customer, and then each child as a sub-customer. Another common use is for property management companies to set up a building as a customer, each unit as a sub-customer, and then the tenants as a sub-sub-customer. For instance, Build'em Inc. has a customer named Building 101. This is actually one of the rental properties that we own, and there are 2 apartment units in the building. By dividing the customer up into 2 different sub-customers, we're able to track the rent we receive for each location separately, and then the contact information of the tenant as a sub-sub-customer. Building 201 has a second unit that we haven't entered yet. Let's set that up now. Select New Customer. Building 201's new unit number is 2. So let's enter that as the display name as. Each location or job needs to have a unique display name as, but the company name and everything else can still be the same if you want it to be. Then check Is Sub-Customer to tell QuickBooks that this is a separate location or job for an existing customer. The parent customer is Building 201. Bill with parent means that we'll send invoices to the parent customer and not to the sub-customer we're creating now. In this case, we want Unit 2 to be billed separately, so we're going to choose Bill this customer. Each unit will now be billed separately. Now that we have another sub-customer underneath Building 201, we can enter the name of the new family living here. Use sub-customers to organize your sales and expenses.
The most important thing to remember about entering a transaction in QuickBooks is that we need to accurately reflect what already happened in the real world. The best way to be accurate is to follow the same workflow that happened in the real world. When you enter sales transactions into QuickBooks, there is one question you need to keep in mind. Does the customer pay at the time of sale? Use the first workflow if the customer pays you later. As you enter invoices, accounts receivable increases, and the customer is given a due date to pay their balance. Use the second workflow when the customer pays you at the time of sale. This method uses sales receipts and is covered in one of the next chapters. The first workflow starts with an invoice. An invoice is a record of what you're charging the customer for and how much they owe you. Invoices increase both the accounts receivable and income accounts. Later on, when the customer pays, you enter a payment. This transaction lowers accounts receivable, which is the customer's balance, and tells QuickBooks where the payment went in the income section. Every invoice needs a payment to be fully closed. If the payment went directly into the bank account by itself, you're done. But if your merchant service company deposited multiple payments together in one deposit, there's one more step. You'll use undeposited funds to combine multiple customer payments into a single deposit so that your QuickBooks records match the bank records exactly. This is the general workflow for sales when a customer is given time between receiving the product or service and paying later on. The next topics delve deeper into the details of receiving payments, using undeposited funds, and recording bank deposits in QuickBooks. While QuickBooks is designed for the non-accountant, there are still some accounting and bookkeeping terms that you should know. To get the most out of QuickBooks, it's important to understand these key phrases and terms, like accounts receivable, or AR. This is an account on your chart of accounts. The AR balance is the amount of money that your customer currently owes you. As you enter invoices, this amount goes up. When you record customer payments, those invoices are closed and the accounts receivable balance goes down. This number on the chart of accounts is helpful in general, but what if you want to see the AR balance for each customer? To see that information, just look at the customer's list, or use a report, like an AR aging summary report. Most of this chapter is about accounts receivable and the transactions that affect it. So remember, accounts receivable tracks the money that your customer currently owes you.
Let's take a look at our customers' balances. Move your cursor over Invoicing or Sales, and then click Customers. Right now, this customer has a $0 balance, which means they don't owe us any money. Let's send them an invoice and see how it affects their balance. Select the New button, and then Invoice. The first thing to enter on an invoice is the customer. Invoices require a customer because without that information, QuickBooks wouldn't know whose balance to increase. The email address is already filled in for this invoice. The information is automatically filled in for us because when we set this customer up, we entered their email address as part of their customer information. The billing address and the terms are also automatically entered. Of course, you can change any of this if you want to. Just click in the field that you want to change, highlight what you want to change, and you can delete or replace it. You can also click drop-down boxes and select different options, like terms for this invoice. The invoice date is when the invoice is issued, and the due date is when the customer is expected to pay it. QuickBooks automatically calculates the due dates for you based on the terms. Towards the top, there are payment options that allow you to accept payment from credit cards and also bank transfers. These two options use a service called Intuit Online Payments, and you'll learn about that later. The product and service section is where you record what you're charging a customer for, the quantity of products or services, if any, and at what rate. Click the Product Service drop-down arrow and select Design, or just start typing the name of the product and service, and press Tab. QuickBooks automatically fills in the description and rate based on what you entered when setting up the product service, but you can change it to whatever you'd like. We're charging this customer for 10 hours of design, and QuickBooks calculates the total for the invoice. On the second line, enter tree trimming. Tab over, and again, it fills in the description and the rate. We're charging them for 15 hours of tree trimming. Press Tab again, and the total amount updates. Now the invoice has two products and services listed, design and tree trimming. What if you want tree trimming to appear first? Click in any of the blank space of the invoice. Now hover your cursor over the 9 dots next to tree trimming and click and hold the mouse button. Drag this line up to where you want it and release the mouse button. Now tree trimming is at the top, above design. The Add Lines button adds 4 new lines to the Products or Services area, and the Trash Can button removes entire lines. Of course, you can also add lines by clicking in the last line without using the Add Lines button. Be careful with the option to clear all lines because it removes all the products and services already entered and starts this section from scratch. As we're filling out this invoice, the customer decides that they also want a rock fountain. So we need to charge them for the fountain and for the installation labor for the fountain. Just add a rock fountain and the installation labor. Now the invoice looks a little strange since there's no explanation that the rock fountain and the installation labor are related. Let's fix that with subtotals. We want to add a subtotal for design and tree trimming, and then another total for the rock fountain and installation labor. So click on the line above where you want the subtotal to be, and click Add Subtotal. Let's add a second subtotal. Now the invoice looks much more organized. If you're charging sales tax, you'll see the tax calculation down below. You learn about sales tax later. Finally, you see the total balance due. Message displayed on invoice will appear at the bottom left of the invoice when you print or email. If you have something you want to attach for your own reference or send the customer, drag and drop it into the Attachments field. Here, you can cancel the invoice, clear it to start from scratch, and check out the printing settings. From here, you can save the invoice to save your progress and keep working on it. There are also more options for saving, like Save and Send, which saves the invoice and emails it to your client. Save and New lets you save the invoice and start recording a new invoice. Save and Close saves the invoice and brings you back to the screen you were looking at before. And Save and Share a Link saves the invoice and emails a link for that invoice to your customer. Let's save and send. If you use Gmail, you can choose a different email address to send from. That way, the email will appear from your email rather than an Intuit email address. The subject line is the first thing your customer sees in their email inbox. And then there's the body of the email. Over on the right, you see a preview of the invoice. You'll learn how to customize this later. Once everything looks right, click Send and Close. Notice that the customer's balance increased by the amount of the invoice. This is the accounts receivable balance for the customer. In the following topics, you'll learn about other delivery options and how to receive a payment towards the invoice. It's easy to find out what customers owe you. Just go to Invoicing or Sales, Customers. We can see that Amy's Bird Sanctuary owes us money, and so does Bill's Windsurf Shop. But you can't see whether or not they're overdue. And if they are overdue, how overdue are they? To get that information, select Reports, then run the Account Receivable Aging Summary Report. Summary reports are useful because they take a lot of information, boil it down, and give you an easy-to-read summary. From this report, you see your customers. Then a column for current, which shows their balance on invoices that are not overdue. The next column's account is for overdue invoices. These balances are 1 to 30 days overdue. Then the next column shows balances that are 31 to 60 days overdue, and so on. Customers' totals are shown on the far right. To see the total by aging period, scroll down. If you click on any of these numbers, you can see the transactions that make up that total. If you want to see even more detail, especially when looking for invoices that are overdue, you can run a collections report. The collections report still divides accounts receivable by customer, but instead of only showing a balance for different aging periods, you see each individual overdue invoice. The past due column even shows you how past due each of these invoices are. This is a very handy report if you're trying to track down overdue invoices. Use accounts receivable reports to make sure that your customers pay you on time.
So what about when you start receiving payments from customers? Before you record a payment from a customer, you need to answer one simple question. Are you receiving the money directly into your bank account alone, or are you going to deposit this payment with other payments later on? If the answer is deposit with payments from other customers, then you need to use undeposited funds. Remember, the main goal in QuickBooks is to record events in your QuickBooks exactly as they happened in the real world. Every transaction you enter is a financial transaction that is either happening right now, like that invoice we just sent, or it's a record of something that has happened in the past, like recording a debit card charge after you bought something. The key to accurate accounting is recording these transactions in QuickBooks with the same details that your bank is going to record them. So your checks, debit card, or credit card purchases all need to have the same detail in QuickBooks as they do on the bank's statements. Recording these types of simple transactions is easy. Recording deposits so they match exactly with what the bank has can be a little trickier. If you deposit each payment from a customer by itself into the bank, then just choose that bank account when you record a customer's payment. This makes deposits pretty easy to record, since each deposit is a single payment from a customer. But most of us combine multiple customer payments together into one deposit at the bank. Or maybe the merchant service company we use collects multiple payments throughout the day and then combines them together into a single deposit at the end of the day. The only way to combine multiple payments into a single deposit is to use undeposited funds. Undeposited funds represents all the money you've received from customers but hasn't been deposited at the bank yet. This money could be cash and checks in a cash register that you'll take to the bank later, or it could be credit card and debit card charges being processed by a merchant service company like Square, and those will get deposited together at the end of the day. It could even be a drawer or a lockbox where you keep money before you make that daily bank run. Undeposited funds is a catch-all term for anywhere your business has money that will eventually be deposited at the bank. In the next few topics, you'll learn how crucial this account can be in making sure your deposits in QuickBooks match the records at the bank.
Now let's receive a payment from a customer. You can go to the customers list and then click Receive Payment. But it's faster to select New, Receive Payment, and then enter the customer's name. And QuickBooks shows you all of the customer's open invoices. First, enter a payment method. This is where you tell QuickBooks how the customer paid you. So if a customer paid you with a credit card, choose Credit Card. If you don't see an appropriate payment method listed, click Add New. This customer paid us with a check, and the number on the check they gave us is 1066. QuickBooks asks you where the money was deposited to. The temptation is to select the bank account where the money will eventually end up. If the check is deposited by itself without any other customer payments, that's the right thing to do. But if the check is going to be deposited together with other payments from customers at the end of the day, you need to choose Undeposited Funds. We're taking this check to the bank later with a few other customers' checks, so we'll choose undeposited funds. By using this account, we'll be able to link multiple customer payments together onto a single deposit. Next, select the invoice the customer is paying. Click Save and Send if you want to save the payment and send a receipt to your customer. Let's just save and close. Since this customer paid their invoice, their balance went down to $0. They don't owe us any more money. But where did the money go? Let's check out the chart of accounts. We told QuickBooks that the money went into undeposited funds, and now that account's balance is the same as the payment, because that's where the check went. Let's record another payment from a customer to see how it affects undeposited funds. Select the customer, the payment method, and this check is also going into undeposited funds, so that we can deposit it together with the other check at the end of the day. And they're paying this invoice. Now save and close. Now the undeposited funds balance is a combination of both customer payments, because that's the total amount of money we have that needs to be deposited at the bank later. In the next topic, you learn how to move money from undeposited funds to the bank account. The final step in the sales workflow is to make the bank deposit. If you recorded a payment directly into your bank account and you didn't use undeposited funds, you don't have to take this next step. This is the balance for the payments we're taking to the bank. And this is the current checking balance. The goal of this process is to move what's in the undeposited funds account to our checking account. You don't have to take this step, but to make everything clear, let's right-click the Current tab and choose Duplicate. You'll see why in a few minutes. Now select the New button and choose Bank Deposit. QuickBooks thinks we're making a deposit into our checking account. If that's not right, you can click the drop-down arrow and choose a different account. Also, be sure to enter the date the deposit was made. In the middle of the screen, you see all of the transactions that are in the undeposited funds account. The total of these transactions matches the total for undeposited funds on the chart of accounts. Check the checkbox for every payment that is being deposited together, or click Select All to include all the transactions. This process groups multiple payments into a single deposit. So our deposit in QuickBooks will match the deposit on the bank statement. What if the amount here doesn't quite match your actual deposit? Maybe your deposit was for a little more because you also deposited a refund check from a vendor. Or maybe there were some processing fees from your merchant services company that reduced the deposit amount. This is where you can include any additional transactions involved in the deposit. If your deposit at the bank was higher than what you see here, you can include any extra amounts. Maybe you received a refund check from a vendor and deposited it along with the other customer payments. Just enter the vendor's name in the Received From field, and then details about that refund here. If your deposit at the bank was lower than what you see here, include information about processing fees or other transactions that caused it to be lower. There were some banking fees that went along with this deposit, so let's enter them. It's common for Square and other merchant services to charge fees on deposits. This is the only way to deduct those charges. We paid the fees to our bank. The account here explains to QuickBooks why we deposited more or less money. Since we paid banking fees, we'll use the bank service charges expense account. This charge was for payment processing fees. And there is no payment method or reference number, but these fields are useful if you need to record a check number. Record the deposit or payment in the amount field. Enter a positive number if you're depositing more money, and a negative number if you're depositing less money. We paid $25 in processing fees, so enter -25. Press Tab. And now QuickBooks factors the processing fees into the deposit total. The deposit screen also has a memo area for any additional notes. And if you have a receipt for the deposit, you can drag and drop it into the Attachments field to upload a digital record to the cloud. Let's take one last look at the chart of accounts. When the deposit is recorded, the undeposited funds balance will move into the checking account, plus or minus any additional deposits or fees we've recorded. Now let's switch back over to the deposit and save and close. Immediately, you see that the balance for undeposited funds has gone down to zero, and the checking account has increased by the total amount of the deposit. Now we know that QuickBooks has accounted for more money moving from undeposited funds over to checking. But what about those $25 worth of bank charges? To see those, click Reports and open the Profit and Loss. Scroll down to the Expenses area, and here are the bank service charges. This method for recording deposits helps you to link customer payments together, and processing fees as well, to account for the actual deposit amount.